Welcome back to Passing Notes with Chaz Guinn. My name is Hayes Brumbeloe. I am your host, and this show is all about real estate investing, but more importantly, investing into notes. Man of the hour, Mr. Chaz Guinn, how are you?
Good to see you, man. Look at this, episode 7.
They're rattling off, man. So let's just jump in. So we've discussed the different types of assets that Revolve Capital has access to via directly from the bank, government agencies, financial institutions. And our conversation thus far has really been focused around note buyers, both new and seasoned. But let's talk about the options that an accredited investor may have for, let's say they want to have a hands-off approach, but they're looking to get into this space. What's available to them?
Getting into a fund and kind of being, like you said, a hands-off guy or gal that says, look, there's a lot of moving parts to learn this business and to manage this business nationally. You know, you guys have been doing this for 15 years. Is there a potential to invest with you guys or alongside you in a fund? And we welcome that opportunity, and that's why we're excited to eventually bring now a new Reg D fund to market, where historically we really haven't been bringing those sorts of funds to market. We've been kind of raising both family office or even institutional capital, sure, and really haven't brought private investors, accredited private investors alongside us to both invest into a very exciting and interesting investment class.
Right.
And that's why for now we say, look, we want to invest with you.
Right.
You can invest with us, I should say. But yeah, so we'll get into the details, but it's now a chance for folks that are saying, look, I'm getting into a different part of my life, maybe
sure,
a different part of my career now. I want to travel. Me and my wife just retired. We want to go see the world. However, I still want to be an active money manager. I want to put my money to work.
Sure.
And I want to see during in my sleep, I want my capital to be making me something.
100%.
And that's why, because we have a preferred return that's paid quarterly, it's done via wire, ACH, whatever your preference is.
Sure.
And then they get to also enjoy the excess cash flow that we're creating by rinse and repeating both our principal capital and our profits that we're generating from these turns. So it's kind of an exciting time for us because it's launching here in Q4.
See, that's exciting. So let's for the audience who maybe not familiar with a Reg D fund, what is it? How does it work? You know, especially those who are accredited, because a Reg D fund is for accredited investors, correct?
Yes, only, right?
Only.
And there's other funds that allow non-accredited investors, like a Reg A fund,
right,
that welcomes non-accredited. However, this is a Reg D fund, and this is where we're saying, look, we're going to allow accredited investors to come alongside us in a very deeply institutionalized asset class. It's a very tough barrier of entry. Even if you have a good net worth, or even if you're able to raise some debt to go alongside of your net worth or your equity capital, it's very tough to break in.
Sure.
And what I mean by break in is know who your sources are, setting up the right processes to be able to effectively launch diligence on a national portfolio.
Sure.
Very rarely do portfolios come out that are state specific or region specific.
Right.
It's kind of like a buy all or none type of deal.
Sure.
And you got to have your systems and your processes down pat to effectively do that.
Sure.
Right? We put eyeballs in every single door, whether we're buying in Maine or San Diego, California. Right? We get eyeballs on every single door. We understand if we know we're buying mortgage debt, but there's the risk here is that the folks in the house don't even take our call, don't answer any of our letter campaigns through our servicer, don't even effectively want to stay and pay, like we always say. Then we say, well, effectively, especially what if you vacate the property, right, and it's sitting there as a vacant shell, and we're sitting over here in Dallas, Texas with our property just sitting open.
Sure.
Potential squatters now can get in. So this is a deeply, highly kind of hands-on approached business.
Sure.
And folks maybe don't have the appetite for that. So we welcome them to come alongside us in a fund where you have this like unique opportunity to come alongside a proven operator. We have a deep track record, right, of raising capital, putting it to work, allocating it effectively. We're never incentivized by rushing through an acquisition just because we're trying to get fees from an acquisition.
Yeah.
We want to play more on the upside that we're providing on the principal capital.
Sure.
We're driven now to be asset managers than we are just to effectively put money into the market on bad investments. We've seen it time and time again. Operators in this space are incentivized just by putting capital into portfolios, right? Not actually underwriting the portfolio to say, that's a bad buy.
Right.
Step away from that bad buy.
Right.
So we welcome, we're tied in with government-sponsored entities. We're tied in with institutional and investment banks, tied in with deep funds that have upwards of 10 to 15 billion of non-performing debt on balance sheet. It's hard to get these inroads. We know this.
Right.
However, come alongside a fund manager that it knows what they're doing in this asset class. And as we see delinquencies obviously upticking, here they come, right? We've been seeing it in the data, but very rarely has it been talked about into the mainstream. Right. And slowly by surely, we're starting to see the news outlets saying, hey, delinquencies are up. Home builder sentiment, all-time lows. 30-year fixed at all-time highs. Selling homes, all-time lows, right? We're like, where's these news outlets been? Where's this data been? We've been seeing that in Q2 and early Q3 of 2022, and here we are slowly dribbling it out. There's always a delayed ripple effect when actually data starts to show up into the mainstream headlines. But guys and gals, we know that in 2023, it's about to be a real uptick in delinquencies. Values are going to flatten as they already have, but they're going to continue further. It won't be a landslide. We know this. I think we've said this in prior episodes. It's not going to be '08 all over again. However, it's going to be very relatable. And you're going to see some similarities in terms of, look at the data right now with foreclosure. It's almost at pre-pandemic highs, right? Pre-COVID highs. So we know that kind of mantra will continue, and we have a inroad to really provide solution to delinquent paper. And for vacant properties, we're able to really rehabilitate communities that are actually just filled with blight, filled with boarded up properties. And if you're a neighbor, right, that's sitting next to a boarded up house,
you're wanting that to be fixed.
I mean, who's coming in to truly do that in today? Financing's hard. So where are you going to get the money to get the financing to actually help rehab the house? The money is coming from the private sector. And so that's why it's an interesting time for folks to kind of learn about potential fund opportunities with us, because it very rarely comes to market. Only a couple of times.
I was going to ask you, it can't be something that's happening on a monthly basis.
I mean, I haven't brought a Reg D opportunity to market in a decade. So
let's talk about the details. Is there a minimum investment? What's the average length of these funds? I mean, let's get into the nitty-gritty. We said we want to kind of be able to attract a far more net of folks to come in, and so to speak. So we said, look, let's lower the threshold to $50,000 minimum to come in. And what it is we have different kind of shares, different classes of shares, right? So determining if you put 50,000, 100,000, up to 250,000, we're giving out an 8% preferred return that will be paid quarterly. And then there will be a 50-50 waterfall between the investor and us, the manager. It'll be a 3-year allocation period, meaning we're going to be actively putting the money to work. Because today, about 1.7 times, 1.8 times are we churning the money over. Meaning if I put dollars out, I am rinsing those dollars with profit and putting it back into the market just shy of 2 times a year. Hence the name Revolve Capital. Love it.
Okay, so because we can churn and burn through product successfully, and we have really good strategic channels to do so, we are saying, hey, look, we can rinse and repeat the money in a 3-year time period up to 5 times. So your original investment year 1 will be churned 5 times by year 3. Okay, and you are receiving a preferred return all along the way, and then we're going to split up the profits as we begin to liquidate in year 4. Right. So it's going to be a fun little time, and then we're also giving a different kind of share out for investors that invest over 250,000.
What does that look like?
That looks like a 10% preferred return, again paid out quarterly, and then again a 50-50 waterfall. So a difference of 8 pref or a 10 pref, and then again a 50-50 split. We're seeing other markets, macro markets, not being able to really find an asset class that is stable.
Right.
Let's just not even talk about return or yield. Let's just talk about stability. What about the ability for your dollars to be backed by a real asset, regardless of the manager?
Sure.
Right? We know that we feel like we're a really tight, efficient, detail-oriented, meticulous manager. We talk about we know we buy portfolios in bulk, but we analyze every single asset, every single door, every single document.
100%.
Because I know we always talk about tails in the business. A tail is, for example, 100 houses. You sell through 90 of them, and then there's 10 houses that just don't sell.
Right.
For whatever reason. They're a mobile home.
Right.
They're manufactured. They're the middle of nowhere. They're vacant. They're dilapidated inside. The copper's been stripped.
Right.
Something's wrong. Documents are missing. That's a tail for whatever reason, right? Our management style, by the way, is we mitigate tail risk from the onset, from the beginning. We don't do it at the end. Right? What we end up with at the end of a portfolio is our properties that we've talked about in prior episodes. We call them our fix and flips, our special teams. For any of you football lovers out there, is we do run offense, defense, and special teams here at Revolve, and we relate that to our strategy of how we buy, how we sell, how we portfolio manage, how we bucket properties into, and determining on those buckets, determining kind of a profile yield that we return on these assets, right? We can get into that later.
That's outstanding. I think it's a huge opportunity, especially for accredited investor. I mean, the whole point of this podcast is really it's awareness and education. And I think that this is an asset class that's kind of been hidden. It's been kind of a secret. And I think that, this Reg D fund it's a huge opportunity for a lot of people to be brought into this space. And so the fund's live. So let's talk about how, they can get in touch with us. I think it's one of those things they're going to get done watching this and they're like, www.revolve-capital.com.
I mean, look, if I had to get into this space and there were some educational things I had to learn to get a little bit more comfortable before I actually comfortably stepped in, I would want to say who's doing this and who's been doing this for a while.
Right.
Who did this through COVID?
Yeah.
Show me the group that did this through COVID. Show me the numbers through COVID.
Right.
How did they wane through when everything was frozen for a period of time, right? Q2 of 2020, if you go back to the data, the world said, we don't know which way we're going to go, left, right, how long things were going to be locked down.
Right.
So when I had to look at an operator, I want to know, in troubled times, how did you survive? Because when in good times, it's a lot easier to just wave. Who can't do that?
Right.
Show me when your back's against the wall, and how did you act? Right. Show me when the lights are off, what it really looked like for you guys. And that's where we're proud to say we welcome the track record review during those timeframes.
Yep.
Because we built deep inroads with sellers to say we are a good, consistent solution. We're always at the doorstep for acquisition. Right? We're constantly ready to rinse and repeat our cash because we're providing good inroads. We avoid headline risk for a major seller getting rid of product on loans that are not paying on the mortgage anymore.
Right.
So what we say is, look, we know COVID is still active in some states throughout the country. Look at the West Coast, still very active in COVID lockdown. Okay, certain restaurants, certain locations are still very, very hyper. Some actual office spaces are actually permanent hybrid now. Right? Some days you come in, some days you don't come in.
Sure.
That actually, I think, is here to stay. I'm one of those that thinks it's here to stay.
I agree.
And although I like the culture of the office, I think it's hard to ever replicate, right? This eyeball looking and being able to just be around somebody's energy. I think that's super vital. We've always talked about that.
100%.
But I looked at this space and I said, look, if I had to get in and I had to look at an operator that's got their act together and they've had their back against the wall over the last few years, and now they're waning and now they're doubling down on delinquencies definitely going up. I'd say, what's going on with that fund? What's the terms? How do I get in? How do I kind of start investing alongside these guys to see how this thing really moves? And what we really have found is we've got a lot of loyal investors that have been investing with us, that have seen us back ourselves and how we swung out.
Sure.
And now we're sitting here looking at some deep relationships that we have both on the government side
Right.
both on the investment bank side,
Right.
both on the institutional side, and saying it's go time.
Right.
So here in Q4, the reason why we're so darn excited is that we have a live fund that we have tremendous amount of urgency right now coming into the fund. So we encourage you guys to get in or call in to learn about more of the details, and we'd be happy to share more details with you guys. But we're opening it here in Q4,
Right.
and it's going to be closed at the end of Q1.
Right.
Okay, so
That was one of my questions. Is these things don't stay open forever?
they don't, and that's why, because we want folks to come alongside. Let's close the door. Let's start opening. We have investment series that we welcome. We only open them a couple of times a year, like we talked about. But this is for a way for folks to get in and come alongside a vehicle that is absolutely benefiting. And when I say benefiting, communities, delinquent homeowners, your uncles, your mothers, your sister's situation is most likely something that's landing up in our servicer's lap. And we are here to try and fix the issue. And the issue is folks can't survive when consumer goods are at an all-time high.
Inflation, yeah.
Mortgage interest rates are at an all-time high. And savings rates are at an all-time low.
Yeah.
So one blip that potentially causes a family to move left or right, that could be the result of delinquency skyrocketing.
Sure.
And we're here to say we're not looking to benefit on somebody's misfortune.
Right.
That's not Revolve Capital's goal. Revolve Capital's goal is to say we want to benefit on keeping you in your house.
Right.
How do we refix why you haven't paid since COVID? Right. That's the Band-Aid that we're trying to say, look, that needs stitches.
Right.
Okay.
Don't put a Band-Aid on a gunshot
No, let's fix that now.
Right.
And let's get you back onto the road of sustainability. Right. That's the goal here. And I know that there has been ways for folks to get into the non-performing loan space and benefit off of somebody's misfortune. That's just not the way that we're cut here. Right. Our ethos, our fabric is just cut different.
Correct.
Right. So I think hopefully that comes through with every engagement that folks have with both us, our servicer, and our mission to really revive what we're all going to kind of head into 2023, 4, and 5.
Yeah, I agree. Well, I think this was super beneficial for our audience. Having the Reg D Fund live and accredited investors the opportunity to jump in, I think it's going to be one of those things they're going to give some serious thought to. That's all the time we have this week, and I appreciate you guys stopping by. Make sure you leave your comments, any questions that you want Chaz to dive in a little deeper on, and make sure you go to revolve-capital.com. There you can learn more about our Reg D Fund and investment opportunities. But until next time, thanks for stopping by. Cheers.